Good afternoon to both of you. Ali, hard to know what to make of a day like today, if it's just sort of a pause in the bear market, especially for the NASDAQ, or the sign that all the bad news is just baked in. What are you telling your clients?
I don't think that all the bad news is baked in, and I don't think there is a lot of rationality between days. That's what we're seeing. We're seeing a lot of volatility and a lot of fickle trading because sentiment is terribly negative. You can see that in the lack of committed buyers and support on the individual and the institutional side. You can see that in the AAI numbers, which just came out. There's a bull rating of about 16%. That's one of the lowest that you're used to seeing. People are really struggling to have conviction in this market, and I think it has a lot to do with, the buzzword stagflation, right? There are two major questions. Has inflation peaked? We at UBS think that it has, in fact, in March, and hope that that will be shown when we see the April numbers. And is there growth? And earnings, which I think are largely driving the positivity we're seeing today, are going to prove that out. I think that once we see this earnings season come through, we have a 10% EPS growth rate on the S&P. We're seeing beats. We have an ISM manufacturing that's 57, which tends to lead to very high levels, 85% of revisions. We're hoping that we can see a relief rally come out of this earnings season because expectations, both from a street level and from an individual level, are just so very low, Sarah.
Well, they're low on Netflix, that's for sure, Barton, right? And the stock basically crashed on the last quarter on that disappointing guidance and has not recovered. In fact, has only moved to lower lows. So what are the expectations for that stock today?
Well, the good news for Netflix is that expectations are set low. I think the bad news is that may not be an inappropriate place to be. I do think that we're going through an evolution in streaming media of a time when everyone was signing up for services and Netflix owned all of it, to now a time when there's a lot more discretion. The consumer is not as eager to sign up for anything that's put in front of them. I think we're starting to see separation of winners and losers, signs of saturation in some markets. And it's going to be difficult, I think, for Netflix to navigate this transition from go-go growth to maturity. But that's, I think, what we're coming into at this point.
So you're not such a fan, it sounds like, from your tone there, and also by the looks of your neutral rating and your $354 price target. Who is the winner then?
Well, I think streaming overall is looking a difficult market. We're seeing lots of competitors come in late, try to spend a lot of money to get people to add that fourth and fifth subscription, which I think is a tall order. Yet these guys are putting up great content and making a big push. Hard to see where the margin comes from in this business until we get a shakeout. I think Netflix is, not, purely affected by other streamers, but also by the broader environment where people are generationally evolving, right? They're watching more TikTok, viral video. I think generationally there's a change that Netflix needs to navigate. From Netflix perspective, their core subscription business is maturing. I wish they'd get into something slightly different, advertising, which they've said they don't want to do, but everyone else is doing it. And I think that could be the one thing that changes the tone, changes the sentiment, certainly mine, if they embrace that.